Paytm third quarter results. Despite a 34% increase in revenue, the loss is still expanding. 197 Communications Limited, the entity that operates the digital payments service Paytm, reported a wider loss last quarter as the company tries to recover from a disastrous initial public offering in November. The company reported a loss of 780 rupees crore for the December quarter, compared with a loss of 474 rupees crore a quarter earlier. Revenue rose 34% from the previous quarter to 1,460 rupees crore, according to a statement. Paytm and founder Vijay Shekhar Sharma have been trying to get back on track after an IPO that raised $2.5 billion, but was followed by a vertiginous plunge in the stock price. Investors paid 2,150 rupees a share in the offering only to watch them plummet, closing on Friday at 953.3 rupees. Analysts at Macquarie Capital Securities Private Ltd made a hotly contested call just before the IPO by initiating coverage with an underperform rating. The analysis, from Suresh Gunputty and Perm Subramanian, proved prescient, but perhaps not bearish enough. Their price target was 1,200 rupees. Investors will scrutinize the latest quarterly results for signs that Paytm can move toward profitability. Payment services to consumers and merchants increased 60% and 117%, respectively, while the company's partners distributed 4.4 million loans valued at about 2,180 rupees crore during the quarter. The stock swoon has proven painful for early backers of Paytm, as its market cap has dropped to 61,800 rupees. Berkshire Hathaway Inc. invested in 197 when the company was valued at more than $10 billion in 2018, and Rowe Price Group Inc. invested at a $16 billion valuation the following year. People familiar with the matter have said. Japan's SoftBank Group Corporation, which holds about 17.5% of the shares, invested in 2017 at a valuation of about $7 billion, the People said. Discover the stories of your interest: blockchain 5 stories, cyber safety 7 stories, fintech 9 stories. Ecom 9 stories, Mill 8 stories, EdTech 6 stories. Sharma founded the Noida-headquartered 197 almost 2 decades ago. The son of a school teacher, he grew up in Aligarh, Uttar Pradesh, and studied engineering in New Delhi, where he taught himself English. He entered digital payments in 2014, and his business took off when India cancelled high-value currency notes toward the end of 2016. The market has grown increasingly competitive, however. Global technology giants such as Amazon.com Inc., Meta Platforms Incorporated, and Alphabet Incorporated are working to expand in India, along with local startups.